Joining us now is Mainstay Capital Management CEO and founder David Kudla. David, excuse me, I always do that to you, David. It's good to see you, and we just were together last week. It was great to see you again here in New York. I realize you're back in your headquarters now, but talk to us about all of this, because one of the things that we spoke about earlier in the show was these data centers. There's massive spending that's already being outlaid, in particular with Meta, which I had mentioned earlier with AI. At the same time, though, a lot of these build-outs have not even started yet. What do you make about the amount of money that's being thrown out there? And do you think that there's a little bit of an overshooting happening here with regards to the spending?
Good afternoon, Cheryl. Great to be with you today. And I love the focus of the show today, that last segment with Amazon. These companies are embarking on major investments, and it has a lot of people concerned. But we believe AI is not hype. AI is a transformative technology for the future. It's going to transform our society as we know it. And so these investments are needed in data centers, massive investments, but the companies that embark on it, invest accordingly, are going to do extremely well. When we look at this sell-off of the past 5 or 6 weeks, the chat ETF, the Roundhill generative AI and technology, an ETF that we like a lot, we've held a while, it held up very well, and it's up 13% year to date. It is an ETF that is focused squarely in this space and is doing quite well, and we know we'll continue to do quite well because these companies will.
Yeah, well, certainly, again, that risk, our ROI is something that return on investment, risk, but return on investment is something that I know has been kind of the question mark that has begun really this year in particular with all of these major announcements. David, let's talk about kind of the news of the day, because we've seen extreme volatility. Obviously, we're now in week 6 of this conflict with Iran. We're seeing oil. At one point, we were over $102. Now we're beneath that for oil. I know that that's a sector that you watch, commodities in particular. Are you buying into the commodity space right now?
So I think investors need to be careful about oil and energy right now with these recent developments. If peace does break out in the Middle East, if we have the talks this Saturday that will start in Islamabad, there's been some gestures made. Israel scaled back their attacks on Hezbollah in Lebanon. We've had the first non-Iranian tanker go through the Strait of Hormuz. It doesn't make a difference in global oil supply, but it's symbolic. So I think both sides want to ceasefire to continue. They want to put all of the offensive military attacks on the side and work towards peace. And that's what the markets want. I mean, I've been saying it for a while on this network. The markets just want the Strait of Hormuz to be open by any means that it can be, so that oil derivatives, urea, all these products get shipped, 20% of the oil that goes globally. So it is very encouraging, and I think both sides want to work towards a peaceful resolution. As long as we stay on that track, I think the markets will continue to recover. We're not even down that much off the highs at this point after that massive rally yesterday and another rally today. Well,
and you made that point when you were here in our New York studios last week, that the minute that the Strait is reopened, that tensions subside, you're going to get a rip-roaring rally. And yesterday we got that, David, to your point that you made when you were on our air last week. I do want to ask you really quick, we've got CPI coming out tomorrow for the month of March. We know with the energy component, it's going to be a hot report. You strip that out, though. What are your expectations for inflation? Because right now the futures market there's basically a 35% chance we're going to get a rate cut in the second half. Markets would cheer that. Does tomorrow's report change that dynamic and maybe upset that prediction?
It may give the Fed some hesitation. We know that it will be largely influenced by this conflict in the Middle East, and oil shocks have tremendous impact on economies, global economies. But if we see oil, as you said, it's fallen back down under $100. If it comes down to a more a level that is sustainable, well under $100, I think that inflation risk is greatly subsides from what we were concerned about the past month. Where we even have a stagflationary type environment. It's all about, as you're right, as I said on the network last week, the Strait of Hormuz being opened and oil to start flowing again.
Here we go. Well, David, that is certainly a story that we are going to be watching once again. Markets closing higher. David Kudla, it's always great to see you, David. Thank you for that perspective. Here we go.